Hello and welcome to another edition of our Navy Now webinar. Today we have Dave Vardeman with us. He's one of our board of directors and has an extensive background in finance. Dave started his commercial business banking career with SunTrust Bank in the early 2000s. David moved back into Washington, D.C. and began working for Capital One Bank. During his tenure with Capital Bank, David received national recognition as Employee of the Year out of 51,000 employees in the years 2008, 2009, and 2010. David was selected to help Nobel Peace Prize winners such as Mohamed Yunus and Mikhail Gorbachev in their micro-lending and world cleaning initiatives. In 2011, David headed to Capitol Hill, where he was responsible for starting a private banking initiative for the U.S. Congress. This 2.5-year assignment ended with David creating a micro-lending program for Capitol Police and architect of the Capitol during the government shutdown. From 2014 to 2017, David started a business banking group with Capital Bank, and as of January 1st, 2018, is now commissioned to build the new not-for-profit business initiative. David is currently volunteering on 5 national boards: Navy Safe Harbor Foundation, Association of the United States Navy, Navy League, Warriors Ethos, and International Leadership Foundation. David's ongoing dedication and work with the U.S. veterans is extremely extensive, touching all lines of service: Army, Navy, Air Force, Marines, and Coast Guard. David was selected by HillVets as one of the 2017's 100 most influential individuals in U.S. veteran affairs in the U.S. David has been recently recognized by American Legions as an honorary member Post 1 and member of the Sons of the Legion. David recently received 2018 the prestigious honor by being selected to receive an American flag from the U.S. Army flown in Iraq above the U.S. soldiers, with appreciation for work he has done on behalf of our returning veterans. We're very happy to have him here today and walk us through his financial workshop. And we've also had our legislative intern, Joshua Riggs, who's going to be helping us work through this workshop. All right, Dave, I'll let you take it over from here, now that all of our technical issues are done.
Good afternoon, everyone. I want to thank Shakira, and I'd like to thank Kate for allowing me to come, as well as AUSN. This is the second video that I've done for AUSN. The first one was with John Larkin, who's a former Sergeant of Arms and a famous Navy SEAL, along with Colonel Adam Rock, who was in charge of the Soldier for Life program. We did a video on transition. So that is on the Facebook page, and I would highly recommend to see that, as it is part of an overall series. Kate Motes, she asked me to design and help with the financial literacy series. It's made up of a budget, and then we're going to be doing an investment video next, as well as a video on business credit. When you think of personal or a family budget, the one thing that really comes to me is stress. As number one or number two reasons why people get divorced is over money issues, is over not knowing where all the money is going. So it is so important to understand where your funds are going, so you can have peace of mind, and everybody's on the same page there. When you turn on the TV and you're watching different shows on PBS and other networks, they always tell you, get a 6-month savings in the bank, and they never really tell you how to get there. And the whole purpose of this budget exercise is, how do I begin to build that 6-month reserves? It can take a year, it can take 2 years to build that 6-month reserve. It isn't something that happens overnight, but how do I even begin the process of getting there? And what I'm hoping to do is to help facilitate that for you here today. And I am not here to preach, I am not here to give judgment, I'm not here to tell you how to spend your money. I'm just here to help you in terms of facilitating a budget for you individually, and you looking at your own financial situation. And just to give you some statistics, 48 out of 52 Americans cannot afford an unexpected $400 expense. And the percentage does not out of that percentage is, they don't really save that much either. So it comes down to a simple philosophy. The hardest thing about saving is saving. And I know that sounds simplistic, but the percentage just says that. Um, During COVID-19, I had a friend, and he lost his job. He had been doing as a mechanic for 25 straight years. And he never saved over those 25 years other than his employer putting a little bit of money into a 401k. So when he lost his job, not only did he lose his livelihood, he also lost his major part of his identity. And thank God the PPP program came, and he was able to get on part-time, and now he's back full-time. Mostly because he specializes in only Volkswagens. There are not a whole lot of mechanics that specialize in Volkswagen. So he is fully employed now, but when I go to him and I talk to his family about savings, they still struggle with it, even after going through unemployment. So to say saving, the hardest thing about saving is saving, there's a lot of truth to that. So it is, what is it? It is a habit. And so what I'm going to try to do today is to go through a budget with my friends here and show you how much money is left after all expenses, so you can start thinking about what is important to you, what is not important to you in terms of your own money that you are receiving on a biweekly or monthly basis. With that, I'm going to begin the process. You should have a budget sheet that is on a link that you can click on that link, and that is exactly what we're going to be utilizing here today. So I'm going to begin the workshop now, and I hope you enjoy it. And this is all for you. This is about you and you coming up with your own personal budget. This is nothing to do with anyone here at AUSN other than giving the information and helping you in your transition, military transition, and or your work life currently. So the first thing we do is we try to figure out what is your monthly budget. And by doing that, we start with your annual budget and we break it down from there. So my first question is, what do you think, to my two experts here, what do you think a good salary to start with would be for somebody coming out of the military?
Coming out of the military, I think it'd be safe to say that we can have an $85,000 budget for that. 80 to 85.
Is that for somebody that is just coming out, or somebody who has a little bit of experience?
I mean, just coming into the military?
No, when you're coming out, or
This is with a 20 years retirement.
okay, so a good salary for somebody in the military that's going for 20 years, you think 85,000.
Mm-hmm.
Okay, now what about somebody who only spends, the majority of the veterans spend 3 to 4 years in service? What do you think their typical salary is coming out?
Coming out probably about 45,000, just as a broad average.
So the tax bracket for 85,000, what did we find that was?
That's 24% federally.
20. And then what do we come up with, 45?
22% federally.
So right off the bat, if you look at the form, we have taxes, and you'll need a calculator that helps. Taxes, health insurance, and payroll deductions. So right now we're just doing the taxes, okay? So we're going to start with 45,000, and then we're going to multiply that 0.22. That equals $9,900. So that's going to come out. This is for the year, by the way. And then for the 85,000, you can tell me if I'm thinking.
Oh no, take your time. You're just fine.
You do it yourself.
Just fine. It gives everyone a chance to get on it. Because we were a little late start.
Okay, that's $20,400.
So I'm gonna put this here on the first line on my sheet.
Yep. Now, what else do we have to? We all should have. We all need. What we all need, what do we all need? We all need health insurance. So how much does health insurance come out of your payroll on a monthly basis?
As an individual, normally it would be about $300, but considering I have 2 children, it would be a little bit more, so it would be 9.
$900
Yes,
a month or
a month.
$900 a month?
A month.
That's expensive. Wow.
I'm not gonna go in on that.
So I think for the purpose of this, what would it be individual?
Individually, 300.
300, and then you just multiply that by your children, okay? So we're gonna put minus 300, and I'll write these bigger when we get to the total number, okay?
Minus 300 per month, or should we multiply that annually?
Oh, per annually. So 300 times 12.
24,000.
Yeah, no, 300 times 12. 3,600. $3,600. And then that's probably the same. Is that the same for anybody of any age? Pretty much?
I believe so. I'm not certain if it goes up. It would go up some as you get older.
And this is also a pretty good figure for healthcare savings as well. You're going to need to save about this amount of money annually if you have a health savings. The deductibles can be $2,000 to $3,000. So I think that's a pretty good number. Okay. Now 401k is a critical part of saving for retirement. Not everybody does it, but I strongly recommend that you start as soon as possible. And if your employer is also matching, you would want to try to get to the matching level maximum. So for instance, if an employer is matching up to 3%, you would want to get to 6%, so then 9% of your salary starts to work for you every year. Now, most employers are based on the percentage. If you put in 3%, then they're going to give you 1.5%. So it goes up as you increase that value, and you want to start at a point where that's comfortable for you, because this is about you. It's not about anyone else. So if 3% is comfortable, start at 3%. And one way you can raise it every year is every year you'll most likely get an increase of salary. So you can increase it annually, maybe 1% every year until you reach your goal. But what we want to do with saving, the hardest thing about saving is saving. So you want to do it in a level that is comfortable to you over time. So right now we're going to say minimum of 3%. I would recommend a higher, as high as you can feel comfortable with, but at least put in 3%. Okay, so we'll do 3% of 85,000. What would that be? It's 22,000. Is that correct? What you can
Sounds a little bit.
do 85,000. 85,000 times 0.03.
2,550.
So this is what I want you to think about. Over a year at 3%, you're only investing $2,550 toward your retirement. See why you want to probably have more percentage than that? But that's minimum, and then your employer will give you half of that. And then that's what you're going with year in, year out. Okay, so then at 45,000, let's see what that is. See, it's only $1,350. So if you have $1,350 out of your 45,000, is that really going to break the bank? Probably not if you base that on 12 months, okay? So a lot of people say, I can't afford to save. If you look at these small figures that come out before your taxes are taken out, you know, this is pretty affordable in terms of a starting point, okay? So let's add these figures up, okay? So then you add your 20,400 plus your 3,600 plus your 2,550. So it's 26,550. And did you add the others up?
I'm working on that right now.
9,900, 3,600, 13.
So to 14,850.
14,200.
800.
Oh, 800. So now what you want to do is subtract the 85,000 minus the 26,550. What do you get?
26,550.
26,550.
58,450.
Okay, so we have 58,450, so divide that by 12.
You get 4,870.83.
That's your monthly budget that you're gonna take home after all of your expenses. 45,000, so let's subtract 14,850 from 45,000.
30,150 divided by 12, you're gonna put 2,512.
Look at you fast on that calculator.
It's the only way I can do math.
So this is reality, and this is you know, something you got to think about. Your monthly income, if you're making 85,000, you're making 45,000, you're going to make 2,512. You're going to make 4,807 monthly. Okay, that's where you start. All right, and then typically this would be split in 2 payments, or based on a biweekly would be 26. But if it's bi-monthly, you're going to get half of this twice a month. So you have to budget your life based on that, okay? So the next part is what is our expenses? So we did the beginning part to figure out what our monthly cash is. Now we're gonna go to all the expenses of life. And the goal of this is to put it all down, okay? And so we're gonna first start with the basics. So a typical rent or mortgage for somebody making 85,000, I'm going to go to my expert Kate and ask her, what do you think a typical mortgage payment would be today?
Probably about 1,600 in this area.
And then for somebody renting, you know, a young person coming out of the military renting,
Right.
or in the military, what do you think the typical?
And in a smaller area than DC, I'd say maybe 650 to 750 a month, somewhere in there.
Still a lot of money.
Mm-hmm.
So let's say 750, because typically you're going to be a little bit older. You're probably going to want a little bit nicer place, right? So we'll say 750. How much are utilities? If you were to add up the different utilities that are at a location.
$7 for electric, 30 for gas, 125, 130, all in all.
And then on the house, what do you think?
And a house is probably
You have
around
trash,
500.
you have trash, and we have
Water.
a little bit more, yeah. So we're gonna say 500. And then what insurance? What insurance? Like most people do get insurance in terms of home insurance. So how much is home insurance now?
About annually it's about 1,300.
So we just divide that by 12. And that can be escrowed in your mortgage. 108. And then how much is renter's insurance is pretty low in terms of stealing. You know,
nothing that really breaks the bank. Maybe $30 a month.
Yeah.
Thereabout.
Okay, so that first expense in terms of monthly, these are mandatory expenses. You can't get around this in life. You just can't. So these are things that we're going to have to spend money on. So that's 1,600 plus 500 plus 108. And then you do the smaller one.
We'll do.
I got the larger one is 2,208. Okay, so that's mandatory life expense, and then yours.
The total expenditure is 910.
I hope these are big enough. So cars are very expensive, and that's another mandatory life expense. You can't get around. I can't because I live right down DC, but most people cannot get around not owning a car. Okay, and I did own a car for most of my life. I loved Mustangs, but everybody has their own individual preference on car. So how much is a typical car payment that you guys are seeing nowadays?
A typical not luxury vehicle, probably about $300 a month.
300. So let's put down 300, and then car insurance for somebody coming out that's a little older. What is their typical?
A little bit older, it's probably about $80 a month.
So we're at $380. How much do you spend about on gas? A week.
Say $20 to refill.
Every week?
Yeah.
So that'd be $80 a month? That's about right. I think that's about right. So we have 300 and 380
460.
460, and then we also have we have to set aside some money if the car breaks down, right? So how much are we going to set beside a month?
Probably any repair that's usual, I would say you'd probably need to save at least 500 for just
Per year, yeah.
normal maintenance.
Per year?
Yes.
That's $41. So we're up to an even.
500.
$500. So car is 500.
But then once again, you're planning for the future in that payment for something that could possibly go wrong.
Yes.
And typically,
But that's
don't
only
do that.
$41.
Mhm.
Yeah, but you're correct. And then for you,
I'd say a car payment for somebody coming out making 45,000, they'll prefer to look used, so 125, 130 somewhere
that's
in
a
there.
good, that's a great price. And then the insurance for a younger person, how much is that?
Is about $125 for myself, and most people I know around the same age pay the same rate.
And gas might be a little lower because you're not battling through as much traffic. So what do you think you spend a week on gas or a month?
A month I spend probably 150. I didn't think it through and got a car that's a premium, so.
And then,
Another planning for your financial future moment.
and then how much? And then another $50. But look how close, no matter where you live in the country, how close this is. 500 to 450. And that's mandatory. So these are two mandatory. It's coming out of your monthly payment. Okay. And we're starting to see why people have such a hard time saving, because there's not going to be much left. So then we go to credit cards. Okay. Credit cards and student loans. Like most people under the age of 35 typically have some student loans out there, right? And also a lot of people have credit card debt. Okay, so what is a typical minimum payment if you had two credit cards? We'll just go with two.
I think that it depends on the balance, of course, but I would say $90. And if you're paying the minimum payment.
Yes. So 90 per card.
Sure.
So that's $200.
Yes.
I think that's a good. I'll say minimum credit card is 200. This is just credit. And then so for somebody like, what do you think a typical credit card payment? $100, half of that?
I'm 100, 125.
I'll say 125 just to go a little bit higher. And then the other one's student loans. Now, student loans is not mandatory for everyone, so I may stay away from that, okay? Because if you don't have student loans, it's just totally different, okay?
Right.
If you do have student loans, you can start seeing 22, 500, 200, you have 48, 70. Okay, you can just do the math in your head quickly and see if you add on $1,000 student loan debt or $500 student loan debt, where your money is going, okay? I'm right for this exercise. I think I'm going to leave student loan out of the credit area and just say, okay, you have credit card debt, you have your car debt, and you have to pay for your living expenses, okay? So then what we do after we do this, we come up with a figure of all three together. And you at home, or when you go through this sheet, you can put in the student loan debt down there, okay? Feel free to do that. For this exercise, I'm not going to do it. So let's come up with the figures we're at right now. So we're going to add 2208 plus 500 plus 200. So that's the 2908. How much do you get?
Oh, slow this time. Gotta be faster than that. I'm having Dave do it for me, so.
So it's 14. Did you get no? 1485. That's what I got.
1485.
Okay. So then what you can do, that's for the credit. And the car expense. So these two figures, 4870, 2512. On the household expenses, you can put 4870 on the right hand side. For car expenses, what did we say? 500.
Dave, I think we need to speak up just a little bit.
Sorry,
It's okay.
I'm forgetting what numbers this was. Okay, that was a car expense. The car expense was 1,600, was 500. No, that was a car expense. Is that correct?
I don't believe so.
No.
2,200 is rent.
Oh, that's the beginning figure. Okay,
Yes.
2,200 is rent.
500 was the car. 450 was car over the yard.
So we really want to add 910 and 1485 together. And what does that equal?
So what did you do one more time?
1485
I
plus
think,
910?
sorry, David, I think we need to subtract 1485, which is all those expenses added up from the 2512.
Yes, we're going to do that.
Okay.
But first, the mortgage is 910 and 1485. What is the total?
2,395.
And then we're going to add 2208 plus 2908.
5,116 for that one.
That didn't work out.
That isn't correct. No, it's 29. 2908 is the figure. It's 2208 plus the 500 plus the 200. Okay? So 2908 is the total at the bottom for the person making 8,500. Okay? At this point. So that takes us through the first page. Okay, our totals expenses right now is 2908 for somebody making 85,000. And 2395 for somebody making 45,000. That can't be right. Sorry, sorry.
Sorry to jump in here one more time. So you subtracted the 1485 to 2512. 2395 is what they have left on the right. You subtracted 2908 from 4870, and whatever that amount is what you have on the left.
See, what I'm trying to do is add this up.
Yeah, all that up is 2908. You subtract that from
4870. But first, we just want that figure to be on this page.
So on this side, I believe the 1485 is the correct number there.
Oh, okay. This makes a lot more sense. So somebody making 85 is for their first page expenses is 2908. Person making 45,000 is 1485.
And you put that balance at the
At the
total
very bottom.
bottom?
Yeah, you can put that at the bottom. And then on the back, I'm sort of running out of room, but these are the mandatory expenses, and that you want to figure on the page one. On page two, it's all of the other expenses that we do in life. And this is very individualized, but a lot of them are necessities that we're putting down here. So I think internet is a necessity. I don't know if cable, because people are tending to do different ways of watching TV and things. But internet, cable are sort of together in terms of the expense, if you were to bundle things. So cable and internet, what is a typical monthly payment for that?
Cable and internet, probably about $70 a month. Well, I don't know. I don't do cable. I just do internet.
I think 70.
Okay.
And then, like, how much does a cell phone cost nowadays?
600.
600 per year.
Oh, 600 for
About
a cell phone itself or the plan?
the plan?
The plan. Yeah, $40 a month is usually about right if you get on a group plan.
Mm-hmm.
Okay, one thing that's a necessity in life is food or groceries. So that can be extremely expensive, and we're going to do this on an individual basis, and then you just multiply how many children you have or other adults in the room. So how much do you think is necessary to pay on food? And this includes lunches that you buy at work. It includes all food that you consume, in a weekly basis. and then you multiply that by 4. So it's easier to do it that way than to try to think of how much do I spend a month on food.
Right.
So think about for a couple seconds, how much do you think you really spend on food, and then we'll multiply that by 4.
For a family, with someone that's established at 85 range, probably about, being conservative, $200 a week.
Right, that's about right. And then
Say if you're in that 45,000 range, you're gonna be younger, so you're probably more active, tend not to eat as much. I would say maybe 150 over the course of a week, give or take.
And is the 200, is that per individual or for the full family?
That was for the full family. How much are you eating?
Well, apparently a lot more than your family.
That's a huge, the food is a huge expense.
Yeah.
It's $800.
That's probably the difference between a family that eats home a lot and
That could be, if
younger
you're
people
younger,
eat
you're
out.
gonna tend to eat out more often than make something.
So per individual, that'd be $200 per individual. So then everybody's family is different. So, and you think individually you're going to spend about $150 on food.
I would say give or take somewhere, maybe 140 if you wanted to go that
I
low.
think that's about right. When you think about buying clothes over the course of the year, how much are you going to budget for clothes?
That's a good question. I don't think I thought about that one.
I honestly never thought about it. I see a cute top and I buy it, which is probably not
Do
great.
you guys budget for clothes at all?
Not normally.
How much are you going to spend a year on clothes?
A year?
Whew.
Maybe 4,000?
Wow.
But I'm a female.
Yeah, it is different. It is different.
And plus,
It is,
that's
yeah.
buying clothes for everyone in the house.
But only for you.
Only for me, maybe 3,800.
So clothing will do, every month you're going to spend a minimum of $150 for per individual, but and that's averaging out for the whole year.
Mhm.
So you might buy one nice thing for $300, or it all comes
Right.
out for the whole year. Shoes.
Right.
When you really think about all the money you spend on clothes,
Yeah.
it's probably in the thousands. But let's say we'll just say $150
For the month.
for the month. And if you guys can track that, that helps me on this form.
Right.
Because you're going to add it. How much does it cost to get a haircut? We'll just say, let's just make it generic and just say you're going to spend at least $35. And for women, I know it's much more expensive than that.
I was gonna say.
But we're going to say you only get your haircut every 2 or 3 months. So let's just say $35 a month that you need a budget. You see how all this money is adding up?
Mm-hmm.
Gifts, like a lot of people forget that they're going to do gifts for Christmas. You're going to give gifts, especially for the people sitting in the chairs. You're going to give gifts for people at weddings, right? When you get invited, you're going to have to budget the expense of going to those weddings.
Right.
Okay, but right now we're just going to say birthdays, holidays, gifts, all of that. How much are you going to spend on that a year? You're going to be more.
I was gonna say, including Christmas, birthdays, everything, I would say maybe 2,000 for the year.
So for an individual, what do you think? Do you think 2,000 divided by 4?
Sure.
$500 divided by 12. You're going to need to budget per person about $41. So please write that down. And then how much do you want to budget?
I would say it would be less than 500 for the year. I'd say maybe 375 for the year.
So it's about $31. Medical copays, maybe let's just put $100 per person on that, saying that if you're healthy, you're not going to go very much over the course of the year.
Probably $20 copay. You probably wouldn't go more than
4 times a year, one physical. Child care is individualized, so we won't go there. But you would have to, if you're doing this at home at any time, you're going to have child care. Pet supplies and vet exams. If you have animals, you're going to have to factor that in. But for this exercise, we won't do that because not everybody has that. People are going to do entertainment as we finish up the COVID-19 incident. people are gonna go back out, and you're gonna go to movies, you're gonna go out to concerts, you're gonna do entertainment type style things, right?
Mhm.
So how much do you think you spend a year on entertainment as we roll into 2021, and let's say life gets back somewhat to normal, right?
Oh, annually or
Yes.
per month?
Well, annual, and then we can just divide it by 12.
It'd be easier just to say monthly, probably. I mean, going out and about, probably maybe $130 a month.
I think that's about right. So write that down.
I would say for somebody getting out at 45,000, they're gonna be younger. I'd say more than that, because you're probably gonna be in your, somewhere in your 20s or your 30s, and you're gonna want to go out and party with your friends. Yeah, I'd say maybe 190.
Yeah, too.
Yeah.
I think you're gonna spend $50 a week on entertainment if you're going out, minimum. You just can't avoid it, okay? Fitness club, most people do join a gym. That isn't a mandatory, but you can go to a gym and not have to spend so much money.
Right.
So it can be as little as $35.
Yeah, 35.
So for the sake of argument, there are a lot of other fees that you can add in here. I want to add one more, and that is things that we buy on a monthly basis in terms of things that come through your credit card on a monthly basis. I know that goes back to the credit card, but you may buy toiletries and utilize in terms of household goods and other items like that. Is that really common nowadays, or do you think?
Oh, I use my subscribe and save on Amazon for toilet paper, shampoo, soap, dish soap, laundry detergent. All these things are on a reoccurring every 3 month basis.
Right. So I think that's something you need to look at as an expense that we don't have to do today, but you need to put that in. Another thing is sometimes a mandatory expense that people forget about are those expenses because they come on the credit card, but also expenses such as alarm systems, other household protection items, house maintenance that you have to do every year. You could add on that. I have mandatory AC issues that I have to do as owning a condo. So there are other condo fees that you may have to implement here. So there's all sorts of fees in life that you are very individualized, and you're going to have to figure them out yourself at home. But what we're trying to do is just show you how quickly the money goes, okay, and how much you have left in terms of being able to invest. So after all that, can you guys help me and add up these two?
Wait. What's my total down there, 29?
No, I'm trying to get this.
Oh, just separately?
Yep, the 70 to 40. Do you have that on the sheet?
I do. And we have a request from one of our viewers to go over these numbers quickly at the end.
See how it's like. Usually I just only use one example, but I wanted to use two today, so it's a little bit harder to read. I'm sorry about that. But I think it's important to go over somebody who's transitioning out and somebody who's maybe been in the military 10 years and transitioning out, or even retired.
571?
500 something?
Yes.
I'm sure that's all.
Why?
We have 200. 130.
Yeah, I missed one.
What do you have?
I got 811 for mine.
That sounds about right.
Oh, I missed one. 691. Because he spent more money going out.
Oh, he spent more. Oh, you think that's it?
200, 150, 35.
70 plus 1.
Oh wait, am I missing something on the other side? Where the 70? Oh, I forgot to add cable and internet. My pen ran out of ink and I was mad at it for a second. See how easily you forget expenses?
Does anyone figure
So, then plus 801.
Yeah, I mean, expenses of life are very general in terms of individualized per person, and which is refreshing because the more money you make, this will stay sort of consistent. So you can budget better as you make more money over life. So now we do the dirty deed, which which is subtracting out what we came up with.
So 2908 plus 801.
No, so we start with our beginning figure. So do we have an ending figure here, right? So our expenses is 801 and 811, right? So that would go on the second page. So now what we want to do is subtract out the mortgage and the car and credit that we came up with, which came out to be 2908. So we start with 4870. Minus the 2908 minus 801.
I have 1161. Where do I put that? Monthly surplus? There?
It's a monthly surplus. It seems high. I'm thinking I'm missing something. What? Groceries?
No, we did
No,
groceries
we did
already.
groceries. No, I'm thinking the bigger figures. 1600, 500, 108 is the mortgage is 22. You said the car was 500 and we're going to pay at least $200 on credit. I think the credit in other classes the credit's much higher. Okay.
Yeah, that's
So,
the minimum payment you had said.
Yes. So we have about how much do we have?
1161.
This sounds like a saver to me. Okay. So here, what do we have here?
260.
So we're going to subtract 2512 minus 1485
1027
minus 811.
minus 811 is $216.
That's more what I see. Plus, what are we doing not with the 85? We're not calculating in, sorry, we're not calculating in family members, we're not calculating in a lot of things that you will do on your form. I would say, if we calculated your entire family and all the expenses, this would be a lot less, and ballet lessons, all of those things all add up. So this figure would be much less, okay? I think this figure at 216 would have matched this figure at 216. Okay, and that's what I'm seeing in the field when I do this with groups of 40 or 50, and they have a shared life experience like Kate, and we start at a figure like this. Okay, so I think this is very consistent in terms of individual. If you were single, you would have 1161. Remember, you're only taking 3% of your 401k, and most likely you would be much higher, and this would go down. Okay, so there's all sorts of life expenses that we didn't add. This would probably come down to the 216. So the 216 is the number that I want to talk about as a transitioning individual out of the military after 4 to 5 years. What are you going to do with your $216 when your total expenses monthly, okay, to get to a 6-month reserve was what? We added the 25 and the 8. What was the total figure here?
Our total expenses. 1 second, let me add it up.
For the 2512 and the 1485. I think it's 1480.
1485, and then you added the 811 for miscellaneous. 2,296 total expense.
So that's your total expense monthly.
Okay.
So if you were to want to get a 6-month cash reserve, you got to multiply 2,216.
96.
96, I'm sorry. 2,296 times 6. 13,776.
So that's the amount you would need for a 6-month reserve in case of an emergency.
In case of unemployment emergency or family emergency that required you to become unemployed, and 13,776 will get you through 6 months based on your current expenses. In other words, the goal is to have the same lifestyle for that 6 months, or very similar lifestyle for that 6 months, while you're either unemployed or in transition. That's the goal. So what you can do in your own worksheet is come up with, how much money am I saving? Right now it's $216. How do I save that on a monthly basis to achieve the goal? And the goal could be, you want to get to 1 month, and then your second goal is, let's get to the second month, okay? That's how I did it.
Yeah.
Just taking 1 month at a time and just clicking it off, especially when my income was very low. My starting income was $15,400. I built it all the way up to what it is today over time. But I had to start budgeting at the very beginning of my life.
Mm-hmm.
So I've always budgeted my whole life. And I've been very successful in terms of savings and throughout my entire life. And one thing I forgot to say in the beginning was my parents were Depression parents, and their parents lived in the Depression. So it was a really hard and strict learning throughout my life in terms of the importance of savings. And so that made me a saver, not a spender. But I do spend things that are important to me, and I do think that people will always spend money on what is important to them. But during that journey, you need to remember and bring peace of mind to that figure of 13,776 for somebody who's making 45,000 in that transition period.
I think maybe if you move a little bit closer to the camera, it might be
Okay.
easier to hear. So this is what you're going to need for as you're transitioning out of the military and looking for another job. This is what you need to maintain your lifestyle and be comfortable. Correct?
Correct. I mean, based on a $45,000 and having all these expenses. Now, in the military, you might not have all those expenses. So you only want to put in what is your expenses and would get you to a different figure, which would probably be a much higher than $216.
But as you're transitioning out, you have to account for these expenses you didn't have before. Like a lot of people that have BAH, they weren't calculating in housing expenses before. So this is something new.
Yes.
And a lot of my friends that were transitioning out, that's an issue they had run into.
Right.
Dave, if you're ready, I'll ask some of the questions
Sure.
members have been.
Sure.
So we had an individual ask, he said, what are you seeing people do in this environment with expendable income? What is the smartest or the most common thing people are doing with their expendable income to prepare during this environment?
During this particular environment, people tend to be focusing their money on strict savings and more of a conservative investment. So their goal is a realization that we live in a very challenging time, which would require the maximum amount of savings that individual can do. So I'm seeing more people saving in savings accounts, in bond funds, things that are a little bit more conservative than the investments that people do on long term. So right now, people are just saving and thinking about being more conservative at this time.
Okay. Another one we had was, say someone receives a big bonus from a deployment bonus or just a bonus at work. Would you recommend they purchase a new car or a large expenditure like that, or what would you suggest they do?
I think like I said earlier, I'm here to guide you in terms of what is important to you. And if what is really important to you is to buy a new car, what I would recommend is look at that money as a one-time bonus that you receive, and take it really to heart that that money is really special and important to you. And then decide start at that point and then decide what you want to do. And whatever you want to do is okay, because that is your choice. What I would recommend, though, is to maybe spend half and save half at that point. I would always recommend having an element of savings in any kind of lump sum cash you receive. So really think about what is important to you, not only short term but long term, and try to come to a conclusion to yourself how you want to allocate those funds. So when the funds do come in, you can apply them to what is important to you. and how you're going to give you peace of mind, not only now, but into the future.
Okay, great.
So what I'd recommend is think about the future as well as the present.
Dave, how much do you need as a baseline for a financially secure retirement?
What I would recommend, or what is how much money are you making currently, and then if you said, okay, I make X amount of money twice a month, would I have that kind of luxury in retirement?
Right.
I would start with doing a budget sheet based on my current financial situation. Your mortgage might be paid off at that time. You might have some less expensive. What is important to you?
Okay.
Because a lot of these investments and a lot of the savings has to do with what kind of lifestyle you want to lead.
Right.
And if you want to lead the same lifestyle, then you need to have enough savings in order to carry you over 10, 15, 20 years in retirement in order to cover those expenses. If your expenses are lower, you may need less. And also, what are your priorities? How much do you want to put in a travel category that you may never have done before? So these are things that I would think about before I would to retire. What is going to make me happy in my retirement? How much money do I need each month in order to achieve that objective? And do I have it now or not? And then take it from there.
All right, we have a question from a member watching right now. She says, what about a long-term care insurance?
Long-term care insurance,
How much?
is a great idea for nursing home. Nursing home pretty much can bankrupt an individual if they have to attend it, and you can get insurance to help cover those payments early in life. It's less expensive as when you get older.
How much would you budget for that monthly, would you say?
That I cannot answer because it's so different based on your age. So the older you are, the more expensive it is. The younger you are, the less expensive it is. So it's something, I find that nursing home insurance, long-term care insurance is very individualized based on your life experience and your family's life experience. For instance, my family, they have always entered nursing home or nursing home type facilities that are tiered in terms of retirement living. And that is not consistent with every single person. Some people want to live with their family, rather than go to a nursing home, etc. So that becomes very personal. But if you're in that track, it is a very good long-term investment because you're gonna have resources to help you during those difficult years.
So you would recommend investing in long-term care insurance, or say AFLAC or life insurance or disability insurance? Would this be something you think would be worth the cost?
Well, I think it's individualized based on the person and what's important to them.
Okay.
I don't think I'm here to recommend directly that you should do something.
Mm-hmm.
I think you'd have to look at your own family history, and everybody's so different, right? But there is financial benefit to have that on your backing you as the years go on and implement. Yeah, giving you peace of mind. If that insurance gives you peace of mind, that is where you want to put your money. Anything that gives you peace of mind, and that's something that comes back to how much money do you need for an emergency if you were to be unemployed? Is it 3 months? Is it 6 months? As you get older, it becomes a year. It can become as much as 2 years based on the current income that you have. So a lot of this is based on your own personal peace of mind of how you would feel.
Dan, Dave, once someone transfers out of the military, what are steps they can take to be careful to budget an appropriate amount on something, say, housing, especially if they had lived on base during their time and are somewhat new to the process of renting and applying for rent and going through that process?
The different programs in the military that prepare you for transition out can be of great assistance. And I think, like what Kate was saying earlier, people don't have these expenses when they're in the military, and when they come out, it's a shock. And things are much more expensive than what you may think. Okay, so I think it's very important when you're in the military and you don't have those expenses to consider preparing for the transition. Save while you're employed. Save while you're able to save, because that money will be invaluable towards the 13776 you may need when you go out. So know, listen to this video, learn that it costs $910, to have an apartment, and you need to start factoring that in sooner than later.
So another question is, should I allocate my portfolio as I age?
Everyone is different in terms of their risk level. So you have to decide, what is my risk level in terms of how I want to invest over my life.
So say when I'm younger, I'd be more aggressive in
I think that aggressiveness is based on each individual. Like somebody may think a blue chip stock fund is a risky investment, where other people think it's a wonderful, very conservative investment. So I think that's an individual question, but you should have a diversified portfolio because it will help you grow over time. If one investment isn't doing well, then you have your cash that's secure.
Right.
And for instance, when COVID went down, the stock market dropped dramatically, correct?
Right.
So if you had the cash in the bank to cover your expenses there, you wouldn't be so concerned because as an investor that will come back to the 27,000 it is today.
Right.
So these are things that you have to think about and you learn over your entire life. But the very first steps is to begin saving for retirement, and that starts, and also save for your emergency fund, and that begins to build the infrastructure toward the future of investment. Your portfolio will naturally develop over your life. Okay.
I think we have time for maybe one more question. Do we have any more from online right now? We have some others that have been sent in beforehand. Okay. How about, why don't you pick one? It's the younger generation, what they think.
So Dave, let's say it's time, as a younger person, I start putting more thought into establishing a retirement fund and getting more serious about the stages of my life further down the road. Within the context of contributions towards a retirement fund, should I make traditional or Roth contributions?
That's a good question. Roth IRA is the traditional IRA falls under the same guidelines as a traditional 401k. So when you're 59 and a half, you can begin withdrawing on whether it's a traditional IRA or a 401k. The difference between a Roth IRA and a 401k and a traditional IRA money, you put the money in and it is not taxed when you put it in. So when you start withdrawing it, hopefully when you're retired, you're on a lower tax bracket than you were when you were working. So you're taxed on that lower tax bracket when you start taking the money out of your 401k or your IRA, okay? The Roth IRA is a wonderful product, and it does cap, I believe, at 120,000. I would have to look at.
It's like 5,000 a year.
Yes, but I mean the amount that you earn, it caps. Okay, so people making a certain amount or lower can qualify to put money in a Roth IRA. Okay, Roth IRA gives you a lot more flexibility in terms of pulling the money out without penalty under certain circumstances, but it also when you put the money into a Roth IRA, you are taxed on that money. But if you put in, for instance, $5,000 over your first year in the Roth, all the interest and all the gains you make over your entire life until you're 59 and a half are not taxed. Okay, so you're taxed on the 5,000, but you're not taxed on the possible 10, 15, 20,000 that 5,000 may make over its lifetime at the end of when you begin pulling out. So the Roth IRA, of course, would be the first money. I have a very small Roth IRA. That will be the first money that I take out. Why? Because I'm not going to be taxed on those funds.
Right.
So it is a wonderful product if you qualify for it. But the other ones are wonderful in terms of you may end up gaining, and then your tax level will be lower when you start pulling it out.
Right.
So there are benefits for both, but you have to think about that in terms of how you want to allocate. Many 401ks and many different IRA products will allow you to invest in a Roth IRA as well as a traditional, so you can sort of split your money within a 401k plan and have your Roth working for you and have your traditional IRA working all at the same time. So that is something I did enjoy for a little while.
Okay, great. Well, thank you so much, Dave, for joining us
Thank you.
today.
Thank you.
I really appreciate it, and we're going to be having another episode and another series with our financial literacy webinar, probably shortly.
Right, and a lot of the questions about investment, this is the budget to try to get you going, and I know that somebody wanted me to break it down before I left.
Oh,
And so the 85,000 was the annual salary, and we divided that, and we did the tax on that, and then we divided the total, and we came up to $26,550, and then as total income. So then the monthly was $4,870, and then the with the car and the credit was $700. So we just added those two together, and it came up with $2,908. Because the mortgage and everything was $2,208, and then $729, and so then we added all the smaller expenses, which was $801, which is subtracted down. So I hope that explains what we did.
We will be posting a picture of this and our worksheets that Josh and I worked on today on our website, along with a copy of this video, so you can go back and double check it. And feel free to send us any questions via email at AUSN@ausn.org. We'd be happy to answer them. All right, thank you. Goodbye.